The broadcast is now starting. All attendees are in listen-only mode.
Hi, everybody. Welcome to today's session where we're going to be learning the setup and preparing ourselves to possibly make a few dollars and definitely have, well, likely have some fun and excitement. This is a fun and exciting event. I don't recommend putting large sums of money into this. I don't have time to put in stops and take profits on this. This is a quick return thing. It takes a little bit of nerve. It takes a little bit of timing, a little bit of confidence on the mouse. And we're going to go through all those things. So let us begin. Feel free to post your questions in the question area. I will see them and get to them periodically. But do feel free and just sound out if you can hear me all right, and we'll be all systems go. Say hello in the question answer. Just acknowledge that I'm not broadcasting here into the ether. Or in the chat area also, more than acceptable. Well, I'm going to begin, and here we go. What is? Oh, my name is Seth Julian. I'm the chief analyst here at BankSo, and I've got a lot of experience trading. I'm 66 years old. I've been trading for about 53 years now, and I started my career out in Wall Street in the early 80s, worked for several international brokerage houses over the years, and now I'm with BankSo. Now, what is the non-farm payroll report? It's simply a total of the number of jobs added to or subtracted from the U.S. economy over the last month, net of farm workers. That's why we have this goofball name. It's called what it doesn't include, the non-farm workers payroll report. Anyway, why is it important? It provides an important indicator of the health of the world's largest economy. It's the most widely followed event on the monthly economic calendar. It's like if you were a healthcare professional and you're walking past people's beds in a ward, and you could only look at one statistic to determine the overall health of the patient. This would be it. This is the kind of thing that a professional could look at, or an experienced observer could look at and say, goner, or okay, he's going strong, he'll be out of here soon. Now, what are the effects of its outcome? Now, the results, if the results are more or less, that symbol means approximately or greater than, more or less equal to or greater than the expectation, the U.S. dollar is likely to gain strength. Likely. Note the red, bold, italicized, underlined word likely. There's risk here, ladies and gentlemen, risk. And risk is simply the probability of the unexpected occurring, because occur it does and will. Now, the result is less than the expectation. The U.S. dollar is likely to weaken. I'm going to get a little bit more into detail about what the actual risks are in this trade. Now, how can the results be exploited? All we do, and this is the simple part, we never have to think, what is it going to do? What do I think it's going to do? My expectation doesn't matter. We wait and see the true market reaction to the outcome, not the knee-jerk reaction. I'll teach you what the knee-jerk reaction is in a minute. It's very simple. I already did. If the result is better than or equal to expectation, the dollar is supposed to get stronger, and vice versa. Okay, that's the knee-jerk reaction. One trades along with a trend that we see in the market, not that we think should happen because of the outcome. And it can stay in trade for a few minutes to several days or more. Several days or more are not often. It doesn't happen often, but it's possible. One could trade 6 currency pairs during the event. Let's look at the potential setup on the trading platform. Now, the trades executed in this webinar are that's the risk, solely intended for information. We're not advising you. We're not giving you trade advice. This is just what I'm going to do, and you're more than welcome to follow along. This is a well-worn pathway once a month, okay? If you come away with nothing from this session, please get this under your belts. If the outcome is positive, and the outcome is expected to be positive, I'll get to the calendar in a moment. We're expecting 187,000 new jobs added. Very robust. If it comes out positive, those pairs with the dollar on the right, meaning that digress for a moment and take a look at this. What does it mean, Aussie dollar or gold or anything? All assets are priced vis-a-vis other assets. Nothing is, gold is priced in dollars. And that ratio is always 1 troy ounce per US dollar. Aussie dollars are traded in the very same, the identical way. The left-handed asset, let's call it, in this case it's a currency, the left-handed asset, always is 1. It always just has an exponent of 1. 1 Aussie, 1 troy ounce, 1 barrel, 1 bushel, whatever it is. One of these is going to cost you this many of those. So 1 troy ounce will cost you 2060, 2040 US dollars. 1 Aussie will cost you 9.97 US dollars, 97 cents. Okay? It's always the way it is. Left-handed element is called the base. In this case, it's a base currency. And the right-hand currency is the one that fluctuates on the vertical y-axis. Okay? If the pairs with the dollar that are fluctuant the outcome is positive. It's a positive report. These guys are going to go down because it's going to cost less dollars to buy the 1 Aussie. So Aussie dollar, euro dollar, pound dollar, you're going to sell those. Okay, they're puts, they're downs, they're going down. Because the dollar is getting stronger, if indeed it is. Equally so, in reverse, for the dollar on the left. So it's going to cost more yen to buy $1. More Swiss franc, more Canadian loonies, and those are all going to be call positions, buy positions. Those are going to go up. And it's opposite. All right, I won't go into it. This is probably too confusing for many of you at this point, but please take note of this. Try and get it in your head, and I'll tell you why. It's really important to keep your head screwed on tightly during these things. They're very exciting, and I've been doing this for years and years and years, and I still get excited. It's fun. It's just like it's thrilling. It really is thrilling. If someone who's been doing this as long as me, the thrill is largely in just having a successful trade, or not minimizing a loss and learning something from it. This is really a fun thing. It's quick, it's fast, it's fairly easy to understand, but you have to keep your wits about you. It's very easy to misexecute. That's a long won't be I've done it. Okay, don't let anybody tell you they haven't made that mistake. Okay, this is this is from the Forex Factory. And all the same, it tells you why it's important, who puts it together, when it's, who reads it, et cetera, et cetera. This is a histogram, and I'm going to show you, this is a picture of a histogram. This is a histogram of the different reports over time. So here is the Great Recession, the Great Financial Crash, or the Great Financial Reset, whatever it is, it is, 2007 bust. And I will show you why that's irrelevant in a moment. The trading platform, we're going to be ready to, this is where we'll obviously execute our trades. This is just a position where after a weekend of swaps, you can tell by the dates, it goes over the weekend, and there's a high swap fee here. Still came out making, excuse me, about $1,000. That's over the weekend. That's holding it with a very expensive, holding fee. And now I just want to digress a little bit and to talk about the risk involved here. There's risk in this particular trading event as there is in all capital market activity. Period. I say this not only because the regulations under which we as a firm and I as a registered security dealer operate oblige us to, but also as someone who has long experience in the capital markets. I well understand, particularly for beginners, the lure of fast and easy profits can quickly shatter on the rocks of market fickleness, okay? It's not you, it's them. The trades one enters into to exploit the non-farm payroll report have a high likelihood transpiring according to expectation. Meaning that the cause and effect between the outcome of the report and the market's reaction to that outcome are likely to occur in the way one anticipates they will. However, sometimes they don't. That is the risk in all capital market activity, the probability of the unexpected occurring. This is the very definition of risk, and occur it does. The reason we wait a few seconds or more after the release of the report to enter positions is precisely to witness the market's reaction. That's how we're making money out of this. not knowing how it's supposed to happen and then losing money because it didn't. That's what the amateurs do. We try to avoid that horrible trap and think more like the successful traders. The reason, we want to witness the market's reaction. And this is so because sometimes the market does not react in the expected way. That's really one of the major risks here. I'll go into all of them. There aren't that many, but there are no two ways about this. These are human beings participating in an entirely human undertaking. Okay, this is, after all, why economics is a social science, not a natural science. Despite the strenuous efforts by economists and financiers over the millennia to represent themselves and their thoughts as scientific, they're not. Looks scientific. Looks like the Cosmodrome in Kazakhstan, or I don't know, the NASA. I don't know what it looks like. Goldman Sachs, for goodness sake. But science, that's where you build things based on laws and principles in the natural world upon which you can build cities and constructs and entire civilizations, is deterministic. You know this here, and then you add it to that there, you can get to a 20-story building by making one of those right there. Every single time. Deterministic. We do not live in that world, okay? We live in a probabilistic world, all right? That means that we can say that under particular circumstances, the NFP report, we expect the market to behave a certain way with a certain probability. In other words, when X occurs, let's say a positive outcome of a positively expected report, 8 out of 10 times Y will happen. That Y being dollar strengthening. It will not happen 10 out of 10 times. And that's not even half of it, or that's half the problem. We don't even know which of the 10 times will behave like the 8. It doesn't always have a familiar face, ladies and gentlemen. Risk is not something that is easy to define and readily identifiable. It ain't. Because this is a social world. Economics and finance are social sciences. They attempt to understand human enterprise. Humans are emotionally, rational, erratic, and do not oftentimes act in their own economic interests. Therefore, there is a significant element of risk in their behaviors as individuals and their collective behaviors as a market, which is generally referred to as a herding mentality, a herd instinct, not a mob mentality, of course, but a group think mentality. And it's well known, it's well documented, and there's nothing, it's not like a mob, a violent mob or anything. The herd instinct is the most precise unifying principle, explaining the market's behavior. Get the graphs, the charts, the indicators, and the algorithms that economists foist as deterministic tools of the trade, they ain't. Okay? And if you know that, and if you're able to sense that, and you have a good human sensibility about yourself, you can use that to your advantage when looking at charts. So that's the formal presentation, ladies and gentlemen. Let me just move on for a moment. Okay, I will switch now, given the magic of technology, to, yes, we'll go to the economic calendar. Oh, no, I've got to reinstate, I know. All righty. There we go. I got a sense of time, okay. 12, okay, we got plenty of time, 12 minutes. Now, here's the non-farm payrolls report. It's out in 17 minutes. We're expecting 187,000, okay? That's very healthy. And let's take a look exactly how healthy that is. Again, on the investing.com site, I drill down onto the non-farm payrolls item, and I see the last release was forecast at 170, came in 216. That was boom. It was a nice trading event to watch. Now, this is that histogram I told you about. It's completely distorted because this is the 1 month after, this is, I think, April of 2020, after the governments around the world insist that their entire workforce remain at home. Drop tools and go home. Don't die, stay at home. And that's it. So in order to get any sense of what on earth is going on, you have to filter out that bar. And now you see, within 1 month, nearly 17 million people came back to work. That's 1,000 is 1 million, 17 million came back to work quickly. And then each and every month have been, hundreds of thousands have been added. These are tremendous numbers, tremendous. You see, it's obviously tailing down, but it ain't going down to, well, here, let's take a look at the pre-pandemic numbers, if we can see that. Be a little creative. Here we go. Get rid of that. You can see that it hovers around 100. Yeah, this is about average for a good post. This is the post-great financial crash. That's what it was, the GFC, the Great Financial Crash of 2007. Everybody has a trade name. You have to know that name. And no, that was a pretty deep hit. It was the worst financial crash since the Great Depression. So, and that was a nice, healthy recovery, of course, until we moved into COVID. Anyway, you get the idea with the histogram that the jobs that have been added to the U.S. economy since the return of the Great Recession have been tremendous, 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 and it's strengthening the U.S. dollar. And so, what we're going to do, just to run through this again, make sure our trade platform is set up, of course. Just give it a quick refresh to keep yourself logged into that, because that is, after all, where we're going to execute. But after the report's released, we get the, I'm sorry, that's the earnings report, my mistake. We go to we get the report, it'll print out here. We do not go immediately to the trade platform. Rather, we have a quick look at this chart. These charts, I should say. These charts are the trading currencies we're going to think about getting into. Whether it's feasible or not, I'm not sure. One of the ones we'll try and aim for, of course, is the dollar yen. These are all, by the way, currently minute charts. And so that'll allow us, they normally don't, operate in the minute chart world, but these will give us just bringing the screen a little closer here. I realize I'm somehow far away. This will give us a really in-depth online picture of what the true market reaction is. And now let's get into some of those risks I mentioned earlier. The major risk is that the market comes out the report comes out the way it's supposed to. And the market doesn't react the way it's supposed to. So we're getting 187, let's say 195 come out, boom, no, market reacts the other way. Well, that happens. That happens sometimes, and there's no trade. I personally do not get involved in trades that I don't understand. I just don't go because they go. I can't explain it. If it makes no sense to me, I certainly don't want to put my hard-earned money into it. That's for sure. So that's a major risk. Another risk is that nothing happens at all. That's rare. That hasn't happened certainly in a long, long time, given the markets and their robustness. But that happens. Market comes out, maybe positive, or even clearly negative, and the market just, couldn't care less. That happens too now and then. And there's the slight, almost negligible risk nowadays. It has happened on some occasions where the surge is so great, it could be so amazing, the reaction is so singularly minded that servers start to jam up and we don't get filled. That's a risk. It really hasn't happened in a long, long time for me on any platform I've used, but it's been known to happen. You just don't get filled, or you get a crummy fill. It's part of the fun. All right, that should do it for now. Let's go to the floor, take a few questions. We're going to go back to the chart. Any questions, ladies and gentlemen? Feel free to ask them in the question and answer or the chat area. It's open now. Feel free. Say hello. Say anything. Quiet crowd today. They're a quiet lot, forcing me to just hold up all ends of the communication. Is that correct? Oh, hold on a sec. I moved something out. First time. Oh, I think I got rid of a chart. Did I? Dollar Swiss. Yeah. Let me just put this back. I see there are no questions here at the moment. So let me just say that I'm going to take a moment, take a breather, get yourself a glass of water. I'm going to replace a chart that I accidentally got rid of in MT4, MT5. Oh, yeah, it's right there. Dollar Swiss, huh? Right there on the top of the list. That didn't take 5 seconds. Okay. Okay, so let's switch back to the site. Here's the site. It's what we're waiting for at this point. Non-farm payrolls. We've got 10 minutes and counting. Again, feel free to ask questions, ladies and gentlemen. This is the time. Well, here's a question from Vivian asks, what other assets can be traded on this event? It's a good question, Vivian. The short answer is, I guess, anything you want. You're surely free to do it. Conventionally, these are the assets that are traded. I have had people in the room over the years trade gold or the S&P, thinking that there's some sort of correlation. My studies, which have not, in this particular case, were not rigid or statistically professional, just back of the envelope, saw that there was no correlation. Sometimes it affects it's random. Again, so that to me is doesn't I have no advantage there. I think it's the currencies. Oh, and I'll say something else with respect to those currencies. Not all of them move. Not all of them move. Some of them move conversely to what might. The $3 on the right, for example, might be going down, yet the $3 on the left may be otherwise mixed. Hard to know. It's just all hard to know, and yeah, that's why it's fun and exciting. It's a little bit of a rodeo show. I hope I've answered your question, Vivian. Anyone else? Well, Bruce is trying to type something. He's not a good. Yeah, I'm sorry, Bruce. You're not really a good typist, but. Oh, why don't you use stops when you trade the non-farm payroll report? 8 minutes and counting, by the way, on the report. 8 minutes and counting. By the way, and because I don't have the time. It's a quick, thing goes up. I'll tell you why I don't have time. Most of that, and I'm sorry I didn't mention this earlier. And so thank you for asking, Bruce. I appreciate the question. Most of these trades don't stay in train for that long. That's why, on the one hand, if it happens like this up and down and you miss it, just as well, it would have turned into a loss. Just nobody can execute that fast, even on a fast site like Bankso. Bang, 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 bang. It's over anyway. Great execution for what? For nothing. So you want to make sure that the trend is in train to get onto it. And then if you make a few dollars, great. Get out, nice. And that whole in and out thing may take 90 seconds or 180 seconds. And that's it. It's all over. Fun, you know what I mean? It's a fun, exciting little event. It's not something, as I say, you want to put your whole portfolio into, few $1,000, few $100, depending on your account. This is a little digression. It's not something you can put your kids through college on. But it's exciting and it's certainly a thrill. Yeah. So that's why we see it's just not that kind of trade. It's not a considered trade like entering the position. I talked to my broker. I got the story. I understand what's going on. I think this is what's going to happen. Here's what looks like a good place to get in, get out. That's what you do when you're trading on a regular basis. This is not a regular thing. This is a different thing. And Elliot says, oh, I see it's not here. I see it 6 minutes and counting later. Elliot asks, I think, correct me if I'm wrong, Elliot. What he's saying is, um, why aren't you showing the different employment rates and the different other aspects of that come out with this report? Which, and there are others. I won't go into showing them. I'll tell you why, Elliot. I don't believe in them. I don't think they have any influence at all. The only thing that matters to the market with respect to the robustness of the U.S. I'll put it to you this way. Let's say, and remember, 187,000 is considered a very healthy, robust addition to the workforce. And yet somehow I don't know, one of those statistics looks negative. The unemployment rate goes up. I don't know how that could be. More jobless. I don't know. It won't negate the effect. It won't. It won't. Or I guess if you were a statistician or a pointy head, economist, you could say, well, it would have been that much better if it was negative and less positive. The slope, there's nothing to it, Elliot. If the more you look at, the less you see. The less you look at, the more you can act. It's a quirk of the statistical and the analytical world. It's called the degrees of freedom issue, and it's one that plays out in daily life. Keyhole. Look, well, I don't want. This is not the place to get into that, but that's. I hope I've answered your question, Elliot. Nope. Hold on a sec. Oh, here, Pinar asks opinion on do NFP with pending orders or buy and sell. No, forget pending orders, Pinar. It's you can't know. In fact, one more thing I'll state, which I didn't before, and thank you for asking that, sir, is that you will see. We might even see this now. Right before the event, there's a lot of There's a lot of nervous activity. These are the newbies and the beginners and the people who think they can second guess and outguess the market. They know what's going to happen, so they're already in taking position. We don't follow these guys. We don't follow them. They're usually wrong, and just don't pay any attention to them. So yeah, it's already started. Remember, we're looking at minute charts here. You can tell what these people are thinking. The dollar is definitely getting stronger against the yen and against the pound, a little less so against the loonie. So it's already, that's in train. You want to follow them? Go right ahead. I think you're making a mistake. I know you're making a mistake. 3 minutes and counting, ladies and gentlemen. Just run through it again. And let me just refresh my trading platform. That's always something I like to do. I don't like to be caught in an exciting moment and, miss out on being able to get the trade in. So keep yourselves logged into your platforms. Okay, 3 minutes and counting. Yeah, Barbara asks what we think Middle East oil or the Middle East situation will have, what its effects will be on oil. Guys, you got to learn how to type, man. It's hard to decode some of these messages. We're going to do an oil session next week, Barbara. Next Wednesday, a half hour before the oil report comes out, we'll have it's a live trading event, different, obviously in content and context. But yes, we'll get into oil next week. We don't have really time to get into it now, but suffice it to say that blessedly, and for this we thank our allies, the Saudis. They have been working assiduously and expensively to keep the price of oil down in the face of a burning Middle East. So it's no mean feat. That's no mean task. But there's what to trade in oil. There always is. There will be for another 30 years. But that's about it. Okay, T-minus 2 minutes and counting. By the way, the timing now starts to get screwed up. My clock says it's got the 2 minutes and 8 seconds. You know what I mean? It's that last minute between the time it says no time and the time it comes out is like the longest minute you'll see. It's always exciting and fun, but a little bit long. I think it's a long count, if you know what I mean. Okay, 1 minute and counting. Non-farm payroll report, January 2024. We're expecting 187,000. Healthy, robust figure. Anywhere north of that, you should see a strengthening dollar. Try and execute a few trades going in that direction. Not get greedy, get out with a little money, and sleep tight. Yeah, these are not the kinds of trades you want to let breathe for too long. These are short term. I think I say it's a fun, exciting event. This is not your retirement fund. In and out. Picking up nickels in front of a steamroller today, ladies and gentlemen. Don't extend your welcome. Okay, see what I mean? This 1 minute's taking an eternity. Expecting 187. Oh, pardonnez-moi. There we go. It's coming out. It's clicking and chicken. Anytime now. Here's the gap, the latency, whatever it is. My clock says 15 seconds and counting. I think they do this just to juice up the traders. They know a lot of people are watching this. Here we go. 2, 1, 0, 0 on my clock time. And here we go. 353. Jesus, son of a bitch. Okay. Here we go. Here we go. Okay. Dollar yen is a buy. Dollar CAD is a buy. That's for sure. Let's get into them immediately. Dollar yen, dollar CAD. Go to my favorites. Dollar yen. We're going to buy dollar yen. Okay, dollar yen, dollar CAD. We're going to buy dollar CAD. Okay, so far so good. Dollar yen, dollar CAD holding nicely. Wow. Dollar yen, dollar CAD holding on very nicely here so far. Not so good. My positions. I got in too high. Mine aren't doing well at all. Give them a little room. Remember, these are 1 minute charts, I think. Yeah, these are 1 minute charts, so we can be somewhat patient, but I'm not looking to make losses here. That could be the end of it. That was a very, very robust report. We just could be seeing a delay. Let's give this time. We're very, very robust. Just to take a look again, it's a beautiful thing. 353,000. It's almost double. Unbelievable. It's going to have more effect than this. Just let's give this a little time to run, man. I think I could be wrong. Not endowed with any extrasensory perceptive gifts here. Yeah, I got in really high in the dollar CAD. I don't know if it's going to recover that. The dollar yen is working out a little better. Little better. Not too much to write home about. Be patient. I think this has got legs. I mean, how can it not, really? See, but this is my point. Okay? We saw this beautiful thing, right? This baby brought us in at 353. That is just a big, big jump on here. I'll just show you on the jump again. Again, we have to cancel out that effect. 353, look at that. And it's a beautiful thing, ladies and gentlemen. It's a really, really beautiful thing. And so, I would expect more than what I'm seeing here. But who cares? It doesn't matter. We're playing the cards we're dealt. All right, we're starting to make money in that dollar yen position. That's beautiful. Beautiful, beautiful, beautiful. Dollar yen's coming in finally. We may want to close that out. 660. We're doing okay. Dollar yen keeps pushing, keeps pushing. Remember, this is only 4 minutes into this, ladies and gentlemen. $6.50 and holding. It's starting to move again. Starting to move. Okay. Now here's an interesting thing. Again, we're talking about the conditions that are not or unusual, what have you. This is a surprising reaction, in my opinion. After a report like that, you'd think they would have been off the charts. Yet only 2 of them are really moving off the charts. The rest of them seem fairly passive. Who cares? So far, so good. Remember making money in that dollar cat? I'll get the hell out of that too. This has got legs. I think it's got legs. I think I'm going to stick around for a while. Oh, and by the way, I'm not going to, what is it? We're into this T plus 5 minutes now. I'll stick around a little bit, but you get the idea. The idea was the trade execution and the fun. I hope some of you are making any money, by the way. How you doing out there? Anybody making some money here? Francis, very nice. Very nice. I'm proud of you. Nice work. Francis taking a little money out of the markets. That's the idea, folks. We're traders. We're here to take money out of the markets. Lord knows we put enough in. Okay, this is starting to pay off. Even though I had a crummy entry on the loony. Let's close my crummy little entry gap. Okay, it's got legs. We're going to hold on. Any more questions, ladies and gentlemen? Now it's just a matter of watching. I wouldn't get into any more positions. Pienaar is making some money. Neil's doing well. Jocko, very nice. I decided on them Pienaar because they were the ones that were popping. Great, I'm nice to see it. People are making money today. It's beautiful. That's beautiful. Okay, it might be time. I don't know. I think I'm going to, unless there are any more questions, ladies and gentlemen, I'm probably going to be signing off soon. Let me remind you that we have a session on Wednesday, the crude oil inventory. We'll be having regular webinars throughout the week for our clients. Talk to your brokers. These days, these people have all the links you need. Get involved. Start learning. My pleasure. My pleasure, Pienaar. It was really a pleasure having you in the room and having you all of you who participated. It's always welcome. So, ladies and gentlemen, I think that's going to do it for today. On behalf of the staff and the management here at BankSo, we're always proud and humbled by your patronage and always glad to see you in the room. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.